Hey people, I'm excited to bring this video today because despite all of the media doom and gloom and YouTube videos with floating faces surrounded by fire, yeah, I made one of those. I think now is possibly the best time ever to be starting out on your investment journey. I know that might sound strange, markets are bracing themselves for a recession. Everyone's portfolio is on fire, mine is certainly on fire. But give me 5 minutes and I'll explain what I mean and why retail investors like me and you, why we've never had it so good. Furthermore, I'll tell you how we can take advantage of the opportunities that will present themselves. And don't get me wrong, opportunities will present themselves over this next year. So let's get straight into it. Okay, this is Billy Basics, but when I first started investing, I didn't really understand the relationship between a share price and growth. And that cost me money because through lack of understanding, I neglected to consider a wider range of investment opportunities. And that was simply because I thought that only companies with a share price of less than £1, $1, I thought that only those companies were capable of delivering multi-bag returns. Multi-bag being 2, 3, 10 times a return on my money. Now in my mind, I just couldn't picture a stock with a share price of £1,000 ever doubling to £2,000. But going from 20 pence to 40 pence, that seemed plausible. I also wanted to own lots of shares. Again, this was irrational, but I felt more comfortable holding 10,000 shares of penny stocks than I did holding a handful of shares of a large blue chip company. Now, notice I'm not talking about company fundamentals. I'm not talking about earnings forecasts or quality management teams. I'm just talking about my thoughts on how the share price related to growth potential. And I saw stocks trading at £1 as being cheaper than stocks that were trading at more than this. Fundamental schoolboy errors. And I was making them all the time. But I won't be too harsh on my younger self because looking back, I didn't have much money. So if I only had £100 to invest, it was physically impossible for me to invest in a company with a share price of £200. But that being said, what I was clearly neglecting to do was relate the share price back to market capitalization, which is the total value of the company. And of course, from that point, growth, where can that company grow to? Now that brings me to the first reason why now is a great time to be an investor. Quite simply, fractional shares. Okay, so fractional shares won't solve the base level issue that I had, which was simply naivety. I needed education for that. But fractional shares open up the market to normal investors like me and you, and they do that by letting us buy a fraction of a share. So what does that mean? Well, let's say, for example, you've got $500 to invest, which is not an insignificant sum. Without fractional shares, you wouldn't be able to invest and hold shares in Apple, Alphabet or Google, Amazon. Are there any that don't begin with the letter A? Tesla. Can't believe I left that one out there. Now the point is, if you're an investor and you've got money on hand, you'd be frozen out of those companies simply because you don't have enough money for a single share. And fractional shares solve that problem because you don't need to own a full share to be an investor. In fact, you just need to own a fraction of the share, and then you'll still see the returns on that investment should the share price go up. Now, from a retail investor perspective, that's revolutionary. The second reason why now is a great time to be an investor is also linked to the amount of money that you've got. And this is impacted by fees. Now, back in the day, investing was really for people that were already rich. There's no two ways about it. There were a number of barriers of entry which prevented the average person from investing in the markets. Now, you need access to a stockbroker. They'd charge you extortionate fees due to lack of competition, and you'd get stung on the spread, the difference between the buy and the sell price. So if you bought a stock, it would need to go up a relatively high amount just for you to be able to sell it and break even. And that gap, that void in the middle, was basically the middleman taking their fat cut of your returns. Now this isn't the case anymore. Competition is rampant. So much so that there's platforms that offer commission-free trading. And not only that, the spread, the difference between the buy and the sell price, that's now extremely narrow in most cases. And some brokers don't even offer or take a cut on that spread, but some do, so always read the small print. Now I personally use Free Trade for one of my ISAs. That's because they've got a low cost platform, and they tick most of the boxes that's important to me. It's only really the foreign exchange fees that they charge that turn me off from their platform. And being based in the UK, and because I buy into some American stocks, that the prices there, the fees there are more expensive than I'd like them to be. And that brings me to the third reason why now is a great time to be an investor. Access to global markets. Now, it's much easier today than it's ever been before to buy into global stocks. I can pick up my phone and within 30 seconds I've logged into my platform, I've got a quote on Tesla, and I've executed a trade, and I'm now the proud owner of Tesla shares, or fractions of Tesla shares. Easy peasy, lemon squeezy, as my son would say. And you know, it wasn't impossible to do the same thing back when I started, but it certainly wasn't easy. And if we're being honest, the more complicated something is, the more costly it is, then the less likely people are going to go and do it. Now, this is great because some of the highest growth opportunity stocks are international. So if you're investing today and you want easy, low cost access to those markets, that's exactly what you're going to get. Now, finally, looking around the market today, there's red everywhere. And whilst that makes a lot of people fearful and nervous, I see it as a great buying opportunity, because stocks that I have high conviction for, meaning I've done my due diligence, I've got solid reasons for investing in these companies, those stocks are getting cheaper to buy. Now, Warren Buffett, who is often referenced on this channel, he recently bought $600 million worth of Apple shares during a 3-day decline in the share price. Now, listen to this bit carefully because it's important. He only stopped buying those shares when the price went up. Now, a lot of people think that this behavior mirrors what they do, but a lot of people are wrong. They sell when prices are falling because the fear of losing money is stronger than the anticipated excitement of gaining money. In fact, a lot of people only start buying when the share price is going up because it's safer to follow the herd. Anyway, that's just a nice example of Warren practicing what he preaches around being greedy when others are fearful. The point I'm making is that whilst markets are fearful, there's often an opportunity for people like you and I to make money. Now look at this chart. This is the S&P 500, which you could say represents how many markets trade. It covers the past 30 years, and when you look back across that period, if I were to ask you the question, when was the best time to invest, you'd probably say as early as possible. But let's assume time travel is off the table and we haven't got a time machine, then investing as early as possible whilst the market is experiencing a sell-off is not a bad shout. Now, doesn't that feel like where we are today? The market is certainly experiencing a sell-off, and if we look back at history, we see that that tends to rebound relatively quickly in a sort of V shape. Now, that's not investment advice, but it's an obvious observation. One final point to make, and it's the reason that I put up a 30-year chart, because if you look back over that period, the best time to invest was simply as early as possible. You know, the longer you were in the market, the better. So whilst I'd always look to increase the amount of time I spend in the market as opposed to trying to time the market, you know, buying at rock bottom, if I can add to my portfolio during a time of deep sell-off, then history tells me my returns will accelerate. And that excites me. That's what I'm trying to do to build my personal wealth. And that's why I think now is a great time for investors to start thinking about positions or taking positions in the market. There's a lot of platforms offering low cost, broad access to all sorts of markets, and you don't need a fortune to start investing thanks to fractional shares. So there you have it. 3 reasons why I think now is a great time to be invested in the stock market. And the cherry on the cake is that if you look around, many companies are on sale. You know, the share price is on sale. And I don't mean compared to recent highs, because you could argue those valuations were inflated already. I mean compared to their company fundamentals. Look, it's tough out there, I know, I get it. But if you follow the principles of this video, you'll either be investing already in an index fund like the S&P 500, or your money's with great companies that you've got high personal conviction for. And if that's the case, don't panic sell. Dollar cost average, pound cost average, whatever your local currency is, average. Build up your position while the markets are putting everything on sale, and simply bide your time until the next bull market returns. And trust me, it will return. If you've enjoyed this video, slap the like button, subscribe if you want to see more videos like this, and if you want to know why I think people that invest in index funds are losers, then check out this video. Spoiler alert, I'm a loser too. Until next time, peace.